Michael Burry predicts the crash of all crashes is upon us. We love talking about asset allocation and making predictions on the economy. And it's not exactly shocking to hear many are predicting that a crash is going to happen in the near future. Michael Burry is probably the most controversial investor of our time. He gained fame when he predicted the massive real estate market collapse of 2008. What may be more frightening, however, is that he believes that we're now staring down the barrel toward another major financial disaster of epic proportions. And now, it seems like Michael Burry may be starting to move again. Before we begin, allow me to welcome you to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. In this video, we'll look into what Michael Burry meant in his prediction about the crash of all crashes today. So make sure to leave a like, subscribe if you're new to our channel, and turn on the notification bell to keep posted. With that being said, let's start. Michael Burry has returned, and it appears that he's betting more against the global financial market than ever before. Burry, admired by some and despised by others, may be the most controversial investor in the world. He has gained attention for making extreme predictions about the state of the economy, which some claim are nearly never accurate, while others contend that he's usually only a bit early. Regardless, he made some significant changes to his portfolio, which may provide clues as to what he thinks is coming up. And despite the fact that he has a large number of doubters, he has made a few very accurate predictions in the past few years. However, before we discuss what he is saying right now and the investments he is making, let's briefly review the present and some of the controversy that has surrounded him in recent years. Michael Burry was the main character portrayed in the Hollywood blockbuster The Big Short from 2015, played by Christian Bale. It describes how Burry accurately foresaw the collapse of the U.S. housing market in 2008. When nearly no one else was betting against the market, he did, and he earned $100 million in the process. Since then, he's become a controversial figure in the world of finance because he makes crazy financial predictions on Twitter that almost consistently go viral. Although Burry and Twitter's new owner, Elon Musk, has a somewhat rocky past, Burry recently commended Musk for restoring faith in the platform by vowing he would no longer delete his tweets after posting them. But shortly after posting that tweet, Burry deactivated his whole account from the site, only to reactivate it a few days later. So it is obvious why Burry's actions have made him somewhat of a divisive figure in the finance sector. Yet despite this, millions of people continue to adhere to his economic predictions. Burry has been warning that financial doom is upon us for the past 2 years. He predicted high inflation long before it manifested and hinted at an impending recession before experts officially acknowledged one. He now predicts that the current negative trend will continue. Burry claimed that we don't know how short he is in a recent tweet, implying that he is massively shorting the market in anticipation of a crash. He's been suggesting for a while that one particular disaster may be among the worst in history or the crash of all crashes. Anyone following Burry's forecasts should not be surprised by anything that has happened. We recently learned what Burry's hedge fund purchased from its 13F filing for the third quarter of this year. A 13F filing is a document that all institutional investment managers in the U.S. must submit and that makes their recent purchases and sales public. On the surface, it might seem that Burry is funding a random assortment of companies, including 2 private prison operators and a telecommunications company. But there's a pattern that not many are noticing. Burry's portfolio now has 60% real asset companies. In the past, he has made significant investments in service company entities such as Cigna and Meta. However, he has made an obvious transition to real assets. To put it another way, businesses rely more on providing digital or online services than those that have a lot of physical assets and infrastructure. So why is Burry currently investing so heavily in real estate? Well, inflation undoubtedly has a lot to do with it. Cash is one of the worst things to have during inflationary periods, since each dollar loses value as inflation increases. And the longer you keep cash, the less valuable it becomes. Burry has frequently discussed this in his tweets. He refers to inflation as a regressive tax, which is the ideal way to express how it depletes cash reserves. Burry also draws attention to the fact that at the moment, inflation is driving up the cost of goods like food more quickly than before. So what does this have to do with Burry's recent real estate investments? Since the affluent are trying to preserve their wealth from inflation during these times, money is moving away from cash and toward real assets more and more. Real assets are considered safer investments than account savings because of this tendency to cause real asset prices to rise faster than inflation. However, Burry is not the only one now making an effort to purchase real assets. Since the onset of inflation around a year ago, we have noticed that this trend is increasing. The typical 60-40 portfolio diversification, which Burry and others are shifting away from, just experienced its worst year since the Great Depression, losing between 15 and 25% of its value. The situation for retail investors is considerably worse, dropping almost 30%. Yet, according to some of the largest investment banks in the world, the wealthy are heavily investing in real assets. Whether you agree with Michael Burry's prediction or not, there is something we can all learn from it, which is the general economic patterns that occurred in the past when the world was facing a scenario similar to the one we are currently facing. The businesses that suffer the most during economic downturns are typically those that society doesn't depend on to function. For instance, companies like Microsoft, Amazon, and Meta may consistently generate enormous profits while offering services that the majority of us desire. They are not, however, exactly the services that society requires. People's spending patterns change when inflation and the economy worsen, with less money spent on luxuries. Because of this, the tech industry has been particularly hard hit over the past year, and mass layoffs have already begun, resulting in the termination of hundreds of thousands of employees. But regardless of how bad the economy becomes, society will always require some services to function, including electricity, infrastructure, social services, and even jails. Burry believes that non-essential goods and services will continue to be impacted, which will increase the value of, or, at the very least, will maintain the value of businesses related to the core functions of society. This is likely why his portfolio has recently seen such a drastic adjustment. But as a general rule, this does tend to happen when economies start to struggle. People cut back on their spending, which causes income loss for less important businesses. However, can we be certain that Burry is correct? Burry is well known for accurately predicting one of the largest crashes in modern history. But that doesn't imply he hasn't made numerous mistakes. He has traditionally been negative about Bitcoin, claiming its price was unsustainable before it went on to hit its all-time high of $64,000. He has been wrong about a number of past predictions about Tesla's stock price. Some claim he was only a little early with his crypto forecast, just as he was when he first began discussing inflation a few years ago. Burry himself has raised the possibility that he is simply habitually early. Burry appears correct about how money is going towards real assets and necessary services. However, no investor is ever 100% accurate, especially regarding the specifics. According to recent data, Burry's behavior appears to be similar to that of the rich at the moment, who are shifting their assets away from riskier stocks and funds and into safer, more long-term ones. This is a trend that many think is likely to continue, especially given how unstable the global financial markets are right now. The truth is that nobody will consistently be right about everything. But there seems to be a pattern to how money moves through time, and the change from riskier to safer investments is what we are currently witnessing. In conclusion, regardless of how much you love or dislike Michael Burry, it is not a good idea to constantly believe one financial expert, since they can never always be correct. Instead, consider how money has really moved through situations similar to the ones we are going through today. Hi, it looks like you've reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed it, and comment your thoughts in the comment section below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you around!